Hi everyone, let's go over my macro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first macro bullish scenario where we're having a double 1-2 looking for a wave 4 in green to form before another push to the upside to finish the green impulse 1, 2, 3, 4, 5 and therefore the yellow wave 3, after which we expect another range and later another push to finish the yellow impulsive count as well in a wave 1, 2, 3, 4 and eventually a wave 5, after which we expect another bear market to the downside. In this scenario, for this wave 4, we are looking at the green box. This is the common target area for a wave 4, 236 to the 05, 63.3k to 53.3k, with the fibs taken from the low of 2 to the high of 3 on the logarithmic chart. The invalidation is the 0.618 at 49.3k, and the reason I like to use the logarithmic chart is because we are on a weekly time frame. Generally on the weekly you like to use the logarithmic chart, and also price has moved about 350%, getting close to 400% to the upside, and with these bigger percentage moves the logarithmic chart is generally advised to do analysis. The second bullish scenario, the very bullish scenario, is a triple 1-2. We have the same double 1-2 over here, but now the current range that we're forming is the third wave 2 in this particular scenario. When I woke up this morning and checked the Discord group, as I always like to do, I saw Jay-Z and Eclipse talking about very bullish scenarios and not necessarily sharing internal counts of this structure, but because of their conversation I did think about the triple 1-2 here, where the first wave 2 retraced to the 236 to the 382 area, generally a rare area for a wave 2, as the most common target area for a wave 2 is between the 05 and the 786, but in very bullish trends and bull markets as well as bear markets, by the way, these retracements can be a lot more shallow, which can be a sign of a very bullish market. So here you can see the 236 to the 382 providing support, but also for the green wave 2, the 236 to the 382 taken from the low to the high here, acting as a support. And therefore I also put on my chart for blue here the 0.236 to the 382 taken from the low to the high, and this gives a target area between 65.4k and 60.3k, which, as you can see, has already been hit. Now what is important though is that this wave 2 is not allowed to be a triangle structure, and of course in the range over here the past couple of days we have been considering triangles as well. So what we want to see for this scenario to play out is an invalidation of the triangle in this local range, and that gives us the option for this bullish scenario, which then means that after this wave 2 we would expect a very big wave 3 to the upside to much higher prices. Something else that I think is very interesting is this 1.618 that is floating here on my chart. This trend-based fib extension 1.618 is taken from the low to the high of 1 to the low of this wave 2. Generally, a wave 3 in green, that is, has to hit the 1.618. Generally, it is a minimum target. I mean, the only real rule in Elliott Waves with regards to a wave 3 is that it is not allowed to be the shortest structure, and that is not the case. This wave 3 is longer than the wave 1, but in a bullish trend, in a bull market, you actually really want to see wave 3 hitting the 1.618, which clearly on the logarithmic chart is not the case. On the linear chart, however, you can see that price hit the 1.618, but even in on the linear chart, in a very bullish environment, moving past the 1.618 is actually very normal. The 1.618, generally a minimum target for a wave 3, it has been hit on the linear chart, but not on the logarithmic chart, which is actually quite interesting as well, giving a little bit of probabilities for this scenario, but we have to invalidate the triangle locally. The macro bearish scenario is a flat pattern as we moved above the all-time high, where we're looking for a wave A 3-wave structure, wave B 3-wave structure as well, and then a 5-wave impulsive wave C to the downside. The most common flat pattern is an expanding flat, where the target for wave B is between the 1.236 and the 1.38, giving us a target between 98k and 122k on the logarithmic chart. The second flat pattern, which is less common, is a regular flat where the common target is between the 0.9 and the 105. That is where we are now. And the most rare flat pattern is a wave A, B, and a wave C, where wave C does not take the low of wave A. So in an expanding flat, you take the low. Regular flat, you want to see the low taken as well. But in a running flat, you take the high over here of this A, but you do not take the low of this A. You're going to stop somewhere over here. But at the moment, this does have a lower probability. If we look at the local structures here on the lower time frames, we do not see an impulsive move to the downside from the local high that we have generated. And for a wave C, we are looking for a 5-wave impulsive move, which of course on the lower time frames then has to start with a local impulse. But at the moment, the probabilities are higher. The move to the downside from the high is a 3-wave structure, not a 5-wave structure. Therefore, the probabilities are higher to take this high sooner or later and still look for more upside and then take it from there. Interesting on the weekly chart are these support resistance areas. We have been talking about this volume profile already actually for a very long time as price was moving to the upside. That is when we put this one on the chart, acting as resistance, then eventually we broke it. Probabilities increased to move to the other side of the range, and we found resistance there at the value area high, support on the point of control, and we broke out. Now that price has moved above the all-time highs of 2021, this becomes a very important support resistance area. You can see that currently we are retesting this area, which is between 65.5k and 57.5k. Below that, this is a very important support area, which is around 50k, as you can see, and then we have the point of control and lower levels, but at the moment that is not too relevant to talk about. When we look at the channels, then an interesting channel that I can recommend putting on the chart, on a logarithmic chart here, is this channel taken from the low to the high to the low over here. And as you can see, nicely respected here around the 40 to 48k area, where we hit the top of the channel twice, found support on the middle of the channel, and now we broke out. Now, depending on the length of this range, this might be a very important support resistance area, the higher end of this channel, the higher trend line of this channel over here. What I do think is interesting is that on the linear chart, this channel is completely different. Here you can see it is the same pool, but now we are not even close to the upper trend line of this channel. Instead, price moved out of the channel, retested the upper trend line, and moved away from the channel, which is actually what you like to see in a bull market. So this is quite interesting. A different channel. I recommend to have it on the chart. It's interesting to sometimes look at it. Of course, on a weekly chart, not too much changes too quickly, but it is an interesting channel nonetheless. So if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities at the moment are higher for the bullish Elliott Wave scenarios, and on number 2, the lower probability scenario, we have the bearish flat scenario. Now, deciding which bullish scenario has the highest probability very much depends on the local range. Do we get a triangle or not? Because a triangle is not allowed in a wave 2, so that is something we have to keep in mind. And also, if price then moves out of this range and takes the high, it very much depends on how it does so, because in a wave 5 structure, if we look for a 1, 2, 3, 4, 5, which is the first macro bullish scenario that I have shown in this particular video, a wave 5 generally has lower volume than your wave 3. So you want to see a push to the upside on lower volume than your wave 3, and then you're going to start looking for this wave 4 in yellow. If, however, we are moving to the upside, take this high, and we have increasing volume to the upside, that is when we can think about a wave 3 after a triple 1-2, as most commonly wave 3 has the highest amount of volume in a impulse. That being said, I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.